James?
All right, we ready? All right, let me share my screen right quick. I just got a couple slides I want to show everybody. Okay, right quick. Last week we went through this slide where we talked about the weekly benefit amount and adding $300 to it. The point that we dropped off was we didn't really know or didn't have guidance on what to do if somebody was laid off or refused to come back to work. So there was a guidance put out on Friday. The Georgia Department of Labor is going to launch what they call their claim conversion program. I put the text in here so y'all can look at it later. Basically, the gist of it is this week they're going to come out with some webinars and some direction on what to do when you permanently terminate people or permanently come back and not working the hours, or people just refuse to come back. So they're trying to be helpful with that, but they ask you to go ahead and continue to file your claim as you have in the past weeks. The next thing that I just want to just show you right quick, they processed 1,840,000 initial claims, of which 812 of those were valid, but they've only paid 575,000, which is a huge amount, right? But that means there's still 237,000 people that have been approved that have not been funded yet. So if you have some folks that, you know, where part of your staff's getting money and the other part's not, they're caught in that 237 number. So hopefully they'll shake that out in the next week. And then the final point is they processed about 108,000 of the claims for the self-employed folks, the gig workers, 1099. 81% of those, which is 87,000, have been approved as valid. But the point they've made here is only 50%. So that's less than 40,000 people have actually filed the second step, which is the request to be paid. So please make sure that you're going in weekly and doing that request. We showed that a couple of weeks ago. So if you can't find that piece, please let us know, because that's going to be the actual final piece of where you get actually start getting the $600. So and then I guess if in that very last paragraph, if there's any good news, then all this was that they saw 195,000 person decrease in initial claims filed last week. Still 3 million, but maybe a little bit of the bright side is that it's stabilizing. So anyway, Josh, that's a quick update on unemployment.
That's great. Scott's got a couple of questions in the chat, if you want to glance at those before we move on from unemployment. Do we continue to file state unemployment and PUA, or just PUA?
I would continue to do both. I just, you know, the state piece will work itself out if you're using that $300 plus the weekly benefit amount formula. On the self-employed side, I just got to believe that, you know, that benefit ends July 25th, that I would be surprised if any of these y'all's businesses are profitable by then and you're able to take any money between now and the end of July. Could be wrong. Y'all may kill it, but it would seem to me that that benefit would always be yours. Josh, what do you think on that?
Sorry, I think the same. All right, thanks, James. That was really helpful. And hopeful that, you know, claims are at least stabilizing. Bethany, do you mind picking up and talking a little bit about EIDL?
Not at all. So we actually have a number of updates related to the economic injury disaster loan, because now that some folks have actually, and as of this morning, I think I forgot to update the one file, actually been awarded, had the money deposited, not just signed loan closing documents. it's much clearer now how this process is going to work. So I've got a good bit of information, and some of it's different than our educated guesses that we shared with you last week when folks were just going into the portal for the first time. So let me share my screen. I've got a few slides. Okay. I'll go here. Okay, so again, folks, there are some folks who got in on that streamlined application before the economic injury disaster loan portal was entirely shut down, who have not received their advances. But these would be folks at the very end, that last week, that they actually took applications. So April 15th, I believe, was a Wednesday. I know someone who applied on that day. She has still not received her advance, but she's maybe the only person I know still in the queue who has not. But if any of you know you applied around that time and you haven't received your advance, don't worry. It appears that they're really steadily working through those, and it should be coming. Again, you don't get any notice. It just shows up in your bank account. So just continue to check on that. And so as of last week, folks who had applied, as of last week, it was actually only folks who had applied on the very first day. The streamlined application opened up on Monday, March 30th. That has now, that window has of course grown as far as the number of folks in Macon who are starting to get invitations to confirm their application and go in and set up a loan portal account. And I know a few folks that have had their loan closing documents shared with them and those submitted. And as of this morning, 2 who have now had their monies entirely in one fell swoop disbursement deposited into their accounts. So we thought maybe we knew the formula based on some discussions with folks, but it sounds like we really don't. We had an educated guess that it was like a quarter of your income for last calendar year as you submitted in your application, but we're starting to hear some numbers that vary from that. So all we know is they've got a formula that they're going to use, and that's going to determine the loan award they're going to offer you. The maximum loan award you're going to get is $150,000. And when you do log in, you create a login and you go into that loan portal, you can either decline the award altogether, which we do not recommend, and I'll get into that more, request a smaller amount than the award offered, which might be relevant in a few cases. And in most cases, we strongly encourage you to accept the complete award. In most cases, when you go into this portal, what they're going to ask of you are just questions to verify your identity, typical credit kinds of questions to be sure it's you. And then they want you to reconfirm where you want your loan monies deposited. So even though you did that for the advance, they ask for that to be reconfirmed a second time in the loan portal. Once you do that, in most cases, then they start to move on to generate your loan closing documents. I'd say it took roughly about a week for folks who got that initial invitation to create an account in the loan portal. In a few days, they got the loan closing documents, and then about a week from the time that initial invitation was extended, folks have had money deposited. So it is moving quickly once you get in that queue, and if you get in there and initiate by creating the account and accepting the award. So we have also confirmed that on the nonprofit and the small business side that your term will be 30 years. Interest rates exactly as they said from the get-go, 2.75 for nonprofits and 3.75 for businesses. You will have a year from the date you close before you have to make a payment. Your interest will accrue, but you will not have to make a payment for an entire year once you close the loan. When you go into the loan portal, it's going to give you an estimated monthly payment figure. So you can go ahead and also, that's an important thing to think about when you start running your projections, which I'll talk about more in a minute. One thing to know, in some correspondences the SBA has sent out, they talk about the option to request a larger loan award. And interestingly, it is re-mentioned in loan closing documents that you can request an increase within 2 years of your loan approval. We have not seen how you do that electronically, so our best guess is once you create an account in that loan portal, you do get an underwriter or a loan officer assigned to you, and that you should ask your loan officer or your underwriter how that process would work if you think, or if you can tell, especially once you get into this, that it's not going to be enough to cover the impacts from the disaster. Collateral. Okay, this was a big mystery to us. And so they are requiring collateral. They're doing this in a very blanket, generic way. It's really interesting. So if your loan is greater than $25,000, so $25,001, you are going to be obligated to commit all of your business assets as collateral to this loan. All right, so there, the whole concept behind collateral is if you fail to make debt loan payments to the SBA, then they either can kind of leverage and place liens on your property through the loan process. You have to do that as part of closing your document, and put pressure on you and or come and collect that asset to try to make them more whole. So we do think there could be a few instances where you may not want to secure your loan with your business assets if your significant other maybe helped you invest in business assets, isn't uncomfortable with that. Maybe if you're a nonprofit and there's some reason your board's not comfortable with it, or you think you might be selling your business assets or your business, if you have the opportunity, then you may not want to request a loan award larger than $25,000. You know, the thing about this is there's not going to be a lot of scrutiny around the collateral quality that you have. They don't even have like an itemized list of what your assets are. So I wouldn't sweat this piece a ton, but just know that SBA will be behind any other lender that you have. But should you get another loan, you are not supposed to put that lender superior to the SBA in a security position. And if you only have like one major asset, or you do sell your business and you still hold this loan with the SBA, and should they come to recoup it, then it will be considered a default, and they may ask you to, you know, pay off the loan in its entirety at that time. So just keep that in mind. Again, this is not the kind of rigor that we see with other kinds of business loans for collateralizing it, but they are going to ask you to make that commitment and essentially pledge all your business assets if your loan is greater than $25,000. If you do collateralize your loan, you will be charged a $100 Uniform Commercial Code or UCC lien filing fee. It appears that there are no closing fees if your loan is $25,000 or less, because you will not have any of those liens placed on your business assets. There are still no prepayment penalties. One obligation that you do agree to when you sign your closing documents and accept this award is that you will secure hazard insurance within a year, and this is interesting, from the issue of the loan closing documents, not a year from when you close the loan, but a year from when those loan closing documents get issued to you. So there's a lot more detail in the closing documents, but just be aware that if you do not pay for this out of your operating expenses at this time, that you will have that expense that you make a commitment to hold while you have the loan. Okay, some really important things around award forgiveness and spending restrictions. Early on, they talked about how your EIDL advance would be subtracted from your loan amount. Well, essentially, whatever loan award amount they offer to you, they've either in their minds subtracted that advance, or they're just like, forget about that entirely. But the loan award that they offer you now is the loan award that they are pledging to deliver to you should you accept it. If you got an advance, you're not going to see that advance. And you got a PPP loan, it's going to be on the PPP side that they are not going to forgive you for your EIDL advance. Okay, so it's going to be on the PPP side. If you also got a PPP loan, that you will not be forgiven for your EIDL advance. I know some of you closed your PPP loan and they didn't subtract your EIDL advance at that time, but until you get that full forgiveness, which Josh is going to spend a lot of time talking about from the SBA through the PPP program, do not count on that EIDL advance amount that you got as forgiven monies on the PPP side. In the closing documents, they're clear. EIDL monies, you have so much more latitude in this program than the PPP, right? But you should not be financing expansion. You should not be distributing your assets, your business assets, to other partners or yourself as a bonus. And you should not undergo a voluntary relocation. You can, of course, get exceptions to this, but you should reach out to the SBA to do that. The other thing that they specify is that you should not be covering losses with your idle monies that can be compensated through other sources. And probably the two most important things here will be your PPP loan, which we'll talk about, or we have been talking about, or any insurance payouts, maybe related to event cancellations or what have you. So just keep that in mind as you think about it, as you think about how you're going to spend these funds. And then they encourage you in the closing documents to use these monies from the federal government on American-made products or equipment. There's no way they're going to be able to really monitor that closely, but that's just a request to use these federal monies to support our local economies. And then on the bookkeeping end, we've heard about this from the SBA and the SBDC, that they do want you to keep records of how you've spent the loan funds. So they want you to keep track of all the receipts and how you've spent that, and retain those records for at least 3 years. So most of you are just going to get one disbursement, but in the event you get your monies dispersed in more than another round, like if you ask for an increase, just know that it'll be 3 years from that final disbursement. And like all loans, there's the typical financial record requirement where they could come and say, we want your financial records for the last 5 years. So they're saying that you will be obligated, if they should request financial records, to submit anything to them from the past 5 years from the date of request, and that you would be obligated to present financial records for them up through 3 years after you either pay the loan off in full or when your loan matures, which will be a long time from now. This is important too. So we've learned about a few folks who've gotten denied by the SBA through this process. The key reasons have been around personal credit issues, not always even necessarily personal credit score. Sometimes it might be, for instance, being behind with child support payments, other things along those lines, but personal credit issues. You have to check off all those questions about, do you qualify? Have you engaged in certain activities that under all these different and just very federal parameters, you do not meet their qualifications? And in some cases, they are issuing a letter or reasons as no economic injury. In the cases where I've heard about this from our local businesses, it's either because their sales were so low / they just opened, that the SBA is determining that there really isn't any need, because essentially the idle loan is supposed to make up for what you lost pre-disaster. So if you hardly had any business pre-disaster, they may respond to you and say you've had no economic injury. However, they've only asked for very limited information, as you know, to make these loan awards. Very, very limited. So if you think that you need to have your application more thoroughly reconsidered, we encourage you to send an email to this address right here, PD, I don't know, it must be someone's name, pdcrecons@sba.gov, and provide any information. So you guys might, even if this isn't relevant to you, you could easily have some friends, colleagues, family who have been denied. So let them know there is a way to contest and request a reconsideration. And you should go ahead and pull together any documents that can help convince them that the reason they declined the application was not legitimate. Have you worked out any kind of debt? Do you have a debt workout agreement that they, contested and said that was a reason they didn't want to give you the loan? Maybe if you can show them complete financial records over the last few years, you can show that there really was economic injury. Whatever is relevant to the reason that they've denied you. And one last thing, because we're having this conversation with a lot of folks, and a number of people are like telling us that they're not going to take it, or they're not going to take the full award, or they've never had business debt and they don't want to have any debt. And first of all, there is such thing as good business debt, and we won't get into that in much detail, but it's not as much of a bad word as a lot of us have been taught to think. Okay. There are a few cases maybe where not accepting the idle loan is not good, but in most cases, we think it is so in your best interest right now. I mean, most fundamentally, we just don't know how the next year or so is going to go. We have no idea if this is going to flare up, if people are just going to be really unwilling to leave their houses, how much of business revenue you might use, and things might look great, but maybe come Christmas, they're going to look terrible again. So if you can take this and just pad your reserves in the event that there are a couple more waves of this or just all this uncertainty, We think that's going to be really key for you guys to sustain. Very low monthly payments. So if I'm going to switch to this slide, because now we know the term is 30 years. It just doesn't even compare. You know, most business loans are 5 years. Good bank loan or a good SBA loan is more like 7 to 10. And the shorter your term, the higher your payment amount is, even if the interest rate is low. And so 30 years is just, I mean, you can't even get real estate loans for these kinds of terms. So you've got to really consider how much cheaper this money would be than any other kind of money you might look up and have to borrow, you know, 6 months from now or a year from now. They're just not going to compare for being so cheap. The other thing is, you may not really have great collateral, but the SBA saying, hey, we're going to give you $60,000. All you got to do is pledge your inventory, where in most underwriting processes, the bank's going to ask you for all this information. They're going to be like, you have like $5,000 in collateral. We're not going to give you a $50,000 loan this time, right? So you may never get a loan award offer like this, you know, in light of the current reality of the amount of assets you hold with your business. And the other thing is, folks are really hesitant to make loans right now. So if you do look up and you realize you need some money, you really may have a hard time, even if you're a very strong borrower. Typically, banks are going to be a lot more conservative. Non-traditional lenders like us, who have less money to lend, have had to really tighten up our lending activity and just focus on supporting our current loan holders. Right. So you may, one of the ironies in life is that it's harder to get money when you need it. It's harder to borrow money when you need it the most, because your cash flow is going to look so tight that you may not even be able to get a loan. And again, there's no prepayment penalty, and you don't have to pay for a year. So if you get a $50,000 loan and you hold it for a year, I looked at it, you'll have about, between the loan closing fee and interest, that'll cost you about $2,000. But if you look up a year from now, imagine how much more we're going to know about COVID, vaccines, what our business kind of cycle is going to look like. For $2,000, you will have made it through the whole year and know you are good, and that will be a very small cost to have it covered. Okay, so there's just very few reasons why we think you should not accept this loan right now. I will tell you though, you can wait 2 months once they issue that award to you before you accept it, or once they issue your loan closing documents, you have 2 months to decide if you want to accept the award. And then you have an entire year from the time they issue your loan closing docs to have your money dispersed. So you could really wait a long time if you just want to hold that loan initially in suspense and then ask them to pause and not deposit your disbursement until about, you know, a year later than they extend that offer to you. The main reasons that you would not want to take on the EIDL loan is if you can already tell with your monthly projections that things are so tight that you just could not make your payments no matter what. The other thing that you do want to be sure that you're keeping in mind is, are you going to have increased expenses once your deferments expire? So if you're putting off paying rent, if you're putting off paying loans, and you look up, and in addition to another $300 that you have to pay the SBA, but you've got another $500 from deferments, then maybe, you know, you aren't in a place where you should take on debt, and there might be some other really big decisions you need to make related to your business. So I just want to re-emphasize the time piece here though. So run your numbers. You've got the time. If you don't understand how to calculate your deferments right now and how much they might end up costing you, this is one of the big things we're poised and ready to help you all with. So let us help you figure out before you turn it down, if you can accept it or accept it in a smaller amount, because we just really think that it's going to be important for everyone to have some reserves to navigate the year ahead with all this uncertainty around the virus. So that's all I had there, Josh.
That was great. We've got 2 questions in the chat box. I'll take the first one.
Okay.
So it's Melissa, and she says, if we have a building loan and we add this UCC, how does that work? And that's a more general question. So let's say you own a building in your business, but you sign up for this loan. There are really 2 pieces to that question that are relevant to everybody. One is, this is not a deed. So this is not real property. This is not real estate that the SBA is taking an interest in. This is just business property. And so those are, instead of being called deeds, those are called UCCs. And the way that priority is established is the order that they're filed at the courthouse, right? So anyone who already has an interest in your business's property, the SBA's interest is going to be subordinate to that. It's going to come after them. So I know, like, for a lot of restaurants, your suppliers file UCCs. Well, those are already filed, so they are not going to be affected by this. Those anybody who's already got a UCC filed in your business property would have to voluntarily waive their rights and subordinate to the SBA to move them up the line. So I think that's one of the things that Bethany was saying that's really good about this is they're just taking a blanket UCC. Yeah, it may create some leverage for them. There may be some value there, but there also may not be, and they're not checking. So, and it is totally different than real estate. It is not affecting any of your real estate whatsoever. And Bethany, you want to take the next one?
Yeah. So based on the loan closing documents, there does not appear to be any issue at all with using your idle money to pay off other loans or credit lines. At one point I read something about they didn't want to see you using it to refinance other debt, but the other way around that, to play it safe, is use all those monies to cover operating expenses, and then whatever cash you have left over to pay down the lines. It's just would be a bookkeeping thing. So it might be better just to spend it on operational expenses and then have that extra cash flow from your income streams to pay off other loans or credit lines. But essentially where we're also driving is, yes, do that. Oh my goodness. Especially if you have anything that's, maybe credit card debt that's now it's switched in, to like a high 20% when this is 30 years at 2.75. And, we think you should not only pay that down, but hopefully avoid any of that kind of debt by going ahead and taking this loan. And again, just go ahead and grab it. You don't know if you're going to need it or not. You have a whole year before you have to pay. It'll cost you a little money to sit on it, but you'll know that it's there if you need it. I don't think we can emphasize enough that we don't think you're going to be able to borrow money cheaper than this. And there's just so much uncertainty that we think all of you having some cash reserves, some savings is a really good thing.
And I think the point of the program is for your business to survive, right? Like, the government wants you to continue selling things, you to continue employing people, you to continue paying rent. And as we've learned in doing all these financial projections, it's a game of inches. And so if moving some of your bad debt onto this good debt frees up $300 a month, and $300 a month combined with all the other changes is enough to keep you profitable, I mean, that's exactly what the government wants to see out of your use of these funds. So, it's a combination of a lot of factors, but yeah, like Bethany said, we're here to help you with the cash flow projections and just try and thread that needle and figure out what combination of tactics is going to give you the best shot. All right, so I'm going to go into the PPP stuff now. And same as Bethany was saying, there's a lot more that we know this week than last week. So these slides are at the same link. And somebody, Emily, Bethany, if you want to grab them off the links file and put it in the chat. And we'll get Bethany's slides merged into this one too, so you've only got one set of slides to look for. But I'm going to skip ahead through the example that we did last week and talk about what's new. So we talked about some of the other considerations around PPP last week, and one of the biggest ones is that you likely cannot get the entire loan forgiven. That's still true. The SBA has made some concessions, and so they've made it easier to get more of your loan forgiven, but it remains a fact as we've gone through this that it's still not likely you can get all of it forgiven. So one of the changes was around the guidance requiring you to rehire 100% of your employees. The way they're going to establish that is not name by name. So you do not have to bring Jane and Ted back. What they want is that you have employees working the same number of hours that were working before the crisis. So the way they're doing that is in terms of full-time equivalents. So basically you take all the hours that are being worked and divide them by 40 hours, because a full-time person is considered full-time if they work 40 hours. So the bottom line is you need the same number of hours being worked. And you can definitely hire different people. They are also, and God knows how this is going to work, but the application gives you the option to wait until June 30th. So as long as by June 30th, you're working the same number of hours, you have employees working the same number of hours, you're going to be good. So this is one of those threshold issues for forgiveness. You had to return to 100%. So they're giving you a lot more clarity and flexibility around how you establish that 100%. So still, this is not related to the dollars that you get forgiven. This is related to getting the forgiveness at all. So, so it's possible that you don't meet this requirement until June 30th, and that's fine. You can still get the forgiveness for the people you did have working, as long as you do get to 100% by June 30th. There was also a new set of FAQs issued on May 13th, and the most significant addition to the FAQs at that time was a safe harbor for demonstrating need. So you may remember in the application, you had to say that economic uncertainty made this loan necessary. And that's a really ambiguous statement. But this safe harbor says that as long as you took less than $2 million, they will not ask any additional questions about whether you actually needed the money or not. One really important thing, and I've seen this discussed and talked about and even reported on, is that they're saying, oh, well, you know, you can get forgiveness now without a bunch of hassle as long as you took less than $2 million. That is not true. It only affects whether you needed the money or not. So there's no additional leeway around forgiveness for loans under $2 million. And then a couple days after that, we got the application. Last Friday, they actually released the application for forgiveness. One important thing to know is that the forgiveness is being handled by the SBA directly, not the lender who issued you the loan. So your bank is going to collect some information from you, but they do not have any role in making a determination whether you get forgiveness or not. The name of the forgiveness form is the SBA Form 3508. You can Google that, or you can click the link I've got there to go to the actual application, and it gives you new instructions and approvals for forgiveness. So one thing that hasn't changed is the 75%, 25% rule, but there's a little more clarity on the other side. So really no changes on the payroll side for what expenses qualify. But on the other side, they've given us an explicit list of utilities that is electricity, gas, water, transportation, telephone, and internet access. So those are all qualifying. And then the other big change in the other category is rental agreements. We really took that to be real estate, the storefront you were renting. But they have clarified that rental agreements for personal property also count. So, you know, I think a big one there would be a copy machine that you're leasing. But any other kind of personal property that's under a lease agreement would be a qualifying expense in this other category. So those are the two big changes. There is a clearer list around what utilities count and the addition of personal property that you're leasing as an eligible expense for other. One of the best things about this program is that there's been a segmentation in start dates. So for expenses other than payroll, your 8-week period still starts as soon as you get the money. Okay, so that's that 25% other category. And for those other expenses, if you are going to pay business debt, you've got to have an amortization schedule from your lender. We talked about this last week, but only the interest portion of your payment is going to count, and that changes every month. Every month, there's a different split between principal and interest. So you're going to need the actual amortization that shows the months you paid and the amount of interest you paid in those months. And you're going to need receipts or canceled checks to show not only was that money due, but you actually paid it. If you pay business rent or lease, you are going to need a copy of the lease or rental agreement and receipts or canceled checks. And for utilities, you're going to need copies of the invoices from the covered period and receipts or canceled checks. Here's another, this is actually worse, I think. But the forgiveness application requires you to maintain that 75%, 25% split. So they're forcing you to prioritize making payroll payments. And as we talked about last week, you may not be able to use all the 75% on payroll. And so what they're saying now is if you spend less than the amount that you're supposed to spend on payroll, less than that 75% of the total loan amount, you have to also reduce the other category on a prorated basis. So if you got a $100,000 PPP loan, 75% of that would be $75,000 for payroll and $25,000 for other. But let's say you're only able to rack up the $50K in eligible payroll during the covered period. Well, payroll has to be 75% of what you spent. So the other category to be 25% of what you actually spent gets reduced to almost $17,000. So you don't just get to spend that 25% on other, no matter what you spend on payroll, they're tied together. There is some flexibility on start date for the payroll portion, though. Remember I said earlier, the other portion is still the 8 weeks that starts as soon as you get the money. And last week, we told you that your payroll portion started the 8 weeks as soon as you get the money. But now you can select an alternate covered period. So the start date for your 8-week covered period for payroll can start on the date of the first pay period following the date you received your PPP funds. So this is probably the best change that they've come out with, because it means you're going to be able to maximize the amount you can spend towards payroll. And the other thing to know is we told you last week that eligible expenses had to be both incurred and paid during the covered period, but payroll costs are eligible if they are incurred or paid during the covered period. So, so this means that for 8 weeks, for the 8 weeks that starts on the date of your next payroll following the date you get the money, every hour that everybody works, whether they're salaried or payrolled, is going to be a qualified expense during that 8 weeks. To verify that payroll, you're going to need a statement showing those payroll transactions, either your bank statement where the checks actually went out, or if you use a payroll service, a statement from the payroll service. You're going to need the tax forms for the period, the IRS and the state. That's the Form 941 for most employers for the IRS, and your state forms. You're going to need receipts for payments to benefit providers if you do any kind of health insurance, disability insurance, 401k. And then you're going to need documentation showing the full-time equivalent employees from 2019. Again, to demonstrate that you're back at 100% by June 30th. So last week, we had a whole bunch of stuff that was completely gray, that we had no idea whether it would qualify or not. They hadn't said it wouldn't, and they haven't said it would. But based on the way that you fill out the forgiveness form, we now believe that different employees likely qualify. So you have to have the same number of hours worked, but not the same people. Also, we believe that salary changes count. So bonuses, commissions, overtime, wage increases, they all likely count if they're earned during the covered period up to $15,385. $15,385 is just $100,000 a year, which is the annual limit for the program over 8 weeks. So if you're running short on payroll expenses, it's now pretty clear that as long as you render those benefits to your employees up to that $15,000 limit, those are eligible expenses. And subject to the overall 75-25 limit, which I told you about earlier, you can catch up past due amounts of business debt, interest, utilities, and or rent. So anything that counted in that other category, it does not have to be incurred and paid, which we told you last week it would. If it was due already, you can catch that up. Again, subject to that limit around having to spend 75% of whatever you spend on payroll. Other changes, I can't imagine, this is the most complicated piece of this whole daggum form. And I have no idea why, because I can't imagine who is doing this, but they have relaxed some of the rules around salary reductions of more than 75%. It seems to me, and everybody I've looked at this with, it's hard to generate the payroll costs you need to get the maximum forgiveness. It seems like it's the opposite problem. You're probably going to be paying people 125% of their previous wages. But anyway, there are some relaxed rules around around if you reduce salaries more than 75%. Talk to us if you're in that situation. I can't imagine why you would be. And then again, I mentioned already the personnel reductions. You can still be forgiven if you don't return to full staffing, even by that June 30th date, as long as the reasons that you're not returning to full staffing aren't your fault. So if you have people who refuse to return to work, or they were fired for cause, or they voluntarily resigned, or they asked you for reduced hours, as long as you document, as long as you get even just an email from that employee that documents why that specific instance happened, you can still qualify for forgiveness. Again, remember, that was a threshold issue. You have to return to 100%. So this gives you a little more flexibility around that too. If you don't return to 100%, even by June 30th, as long as the reasons are not your fault, you can still get forgiveness on the portions that you did spend on eligible activities. But remember, this is not a waiver to spend the money on different items and still get it forgiven. You still have to just spend it on payroll and those few other expenses, and you still have to spend it in the 75-25 split. So God help us. That's the end of it. I'm scared to death to look at the questions. I hope that was helpful. So I'm going to start with Mrs. Ridley. Will you be penalized if you pay it off earlier or return any unused money back? No, there's no prepayment penalty whatsoever. So you have two options on repayment. I think I still left this slide in there, so let me flip back to it. Okay, so your first option is whatever you don't spend, you pay it back to your lender immediately. It's at the bottom of this slide. So whatever you can't get forgiven, absolutely, at the end of this period, just pay it back, and that's it. That's all you owe them, is just that money back. Your second option is to pay it back according to the loan documents when you closed on the loan. So for Truist, for instance, I know that repayment term is 24 months. They charge 1% interest. And you don't have to start paying for 7 months, but then you have to pay whatever you owe over 17 months. So basically, for quick math, you just divide whatever's not going to be forgiven by 17 and then pay it back over those 17 months. So those are the two options for paying it back. But sure, if you want to pay it back just in one fell swoop, there's no penalty whatsoever. And then Darren asked, so it's based on hours, not employee count. That is exactly right. So that is a really significant change from what we believed beforehand. They want you to add up. So like for you, Darren, I don't know what your average shifts are, but if you have 2 people on 10-hour shifts a day, right, that's 20 hours a day times 5 days a week. That's 100 hours a week. So you take 100 hours divided by 40, that's 2.5. So you have 2.5 full-time equivalents, and that's what they want to see you back at. They want to see you back
Okay.
at 2.5 full-time equivalents.
Okay. Gotcha.
And then Whitney asks, what if we've just been paying them their previous average wages, but they aren't actually clocking hours? There is a, well, the forgiveness form, the test around wages is that you haven't reduced them more than 75%. And my God, it is a horrible form to fill out. You have to fill it out for each employee to demonstrate that you're not. But, you know, I think you probably need to generate that. I think you probably need to track the hours that they're working, if that makes sense. I think you need to translate the amount you are paying them into an hourly basis that shows two things. One, it shows they're working the same number of hours that they were working beforehand. And two, when you divide the amount you've paid them by the number of hours they're working, that they're making at least 75% what they were making previously on an hourly basis. So both those things matter. They have to be working the same number of hours, and they have to be making at least 75% of what they were making. Any other questions? And we'll, you know, I imagine it's going to be, I can't remember when the earliest time that somebody closed one of these loans was, but say 3-4 weeks ago. So we're probably 3-4 weeks from people having to fill this out. So we've got some time for you to continue asking questions. Whitney asked a follow-up. Yeah, they have to be working though, Whitney, is what I'm saying. So, so I don't know what to tell you. When you pay them, you need to be paying them for hours worked. I mean, even if that is home, there's no tracking around whether they are actually doing things for you or not. But you have to be able to document that they were hours worked and their pay. So I'm not saying that you have to give them like a home-based assignment. Please spend time researching how to make cocktails or, you know, whatever. But your payroll records need to show that you're paying them for hours. Bethany, can you help me out? I realize I'm not being clear, but if anyone does understand what I'm saying, if someone could bail me out of this mess.
Yeah, I mean, I guess this is also that dance between, you know, how much they're going to really be able to monitor this and what they're not. The agreement that you're making is that you're paying them for hours performed in the business.
That's it.
And that's what your calculations should be based on. So
you have to be able to check that box.
Yeah.
So I understand they're not actually at work, but your records need to show that you're paying them for hours worked.
Yeah.
Almost like an honor system, almost saying that they, you know, did X amount of hours of work. And because to your point, there's no way to, like, for them to verify all that stuff.
No.
What they did.
None whatsoever, except where you paid them and how you figured out how you did it. And the way you figured out how to do it probably is based on what you were doing before, which is the right way. So all I need you to have is an Excel sheet that shows I paid employee 1 for 20 hours because that's what they worked on average before the crisis. And I paid them $10 an hour because that's what they were making.
Right. So like for me, I could just like realistically just print my reports out from ADP because like ADP does all my payroll stuff.
Absolutely.
So
yeah.
Okay.
So yeah, that's what they're monitoring. They're not no one from the SBA is going to have any idea whether these people showed up at your place of business and did anything for you. What they're going to have is the payroll record that shows how they were compensated. And what I'm saying is there is both an hour limit and a dollar limit. So whatever form you use, I mean, even if your payroll system doesn't show that, you need to start a little Excel sheet or a Google sheet on your own that says, you know, employee 1 works 20 hours gets $200. So you've just got to be able to demonstrate that to the SBA if they ask for
Okay.
documentation. It doesn't matter if they're actually working. It just matters that they're getting paid for the same number of hours that they worked before, and that the hourly rate is no less than 75% of what they were making. And sure, make them do some work. Find some video webinars they can watch around. I'm sure YouTube's full of how to make craft cocktail videos.
Right.
Or gosh, I imagine there's some good training videos around hygiene too that are going to be really important when we do get back. Anybody have any other?
Josh,
Yes.
I wanted to jump into with Dot Ridley's and just say that it's actually the case on both loans.
Yeah, that's right.
Injury disaster loan, PPP, that there's no penalty to pay off early. There's no penalty to send back unused funds. So, and one of the things too around the PPP, a little bit of that myth and the bad debt, good debt thing is just because you can't use 100% doesn't mean you shouldn't take it. It just means you should realize what you can use and use all that and let it be forgiven so that that's money that doesn't come out of your operating expenses, but realize that it may be in best interest at that to pay back, the quarter or the 50% that you're not going to be forgiven based on these updates. Now, luckily, it sounds like it's going to be a lot easier to at least use, maximize more of it, but don't deny it altogether, even if you can't get 100% forgiveness.
The other thing I'd think about is whether there's an opportunity in your business to use this money to make more money, right? I talked to an entrepreneur the other day. This isn't quite that example, but he needs to replace a huge piece of equipment, and he's needed to replace a huge piece of equipment for a while. But remember back to our introductory class around the CARES Act, there's now this net operating loss carryback, and there's also accelerated depreciation. So if he goes in and buys this equipment now, he's going to get to depreciate all of it this year. When he called his tax professional, they said that's going to save him $20,000 in taxes this year. Right? So he's going to use this economic injury disaster loan to buy this $70,000 worth of equipment. $20,000 comes back to him immediately off his tax bill, which he can go ahead and pay off early from the loan, right? And then the rest of it, he's got 30 years to pay off. And they don't give 30-year equipment loans anywhere for anything. So this is going to solve a problem for his business that existed separate from the crisis. So that's one thing to think about. And then another thing to think about is if there's a line of business that you've been thinking about opening up, or there's a piece of equipment that could increase your business's efficiency, any of those kinds of things, I think, are things to think about. And then maybe most importantly, like Bethany was saying, is if you haven't been carrying 6 months of cash, which I don't know any business that has, this may be something for you to think of, just to have that cushion, to go ahead and have it available. I mean, right now the infection rates are looking really, really positive for Georgia. They're still trending down, even though we've reopened to some extent. But if we have another spike like they did in 1918, you have seen how fast the government can work at its absolute fastest, which is not fast, right? So, I mean, I think it's prudent to have some savings available because of the unknown for what's ahead. And so both these programs give you that opportunity. Any last questions? Well, I hope this has been helpful. I think there's a lot more clarity around both these programs now. I don't think we got every answer we wanted or were hoping for, but we definitely got some improvements from what we thought. And we're going to be available to help you as you start filling out these applications and spending this money. Just let us know. Just let us know what you need. And I'm looking forward to seeing y'all again next week or around downtown. Our office is staffed back 100% at our regular hours. So we're here if you need anything from us. And it's been great to see y'all. I am, again, just continue to be really impressed that y'all are getting the information that you need, that you're taking advantage of these programs, that you're not getting overwhelmed, that you're doing your best to follow these guidelines, and that you're getting back to work where it makes sense and it's safe for you and your families. And I'm incredibly grateful to all of you. So I look forward to talking to y'all again soon. Have a great day.
Thank you.